Good afternoon, everybody. It's 1:06 p.m., 8/7 of 2019. I have the S&P 500. We had a big gap down. We rallied all the way up. By the way, this is an hourly chart right here. And we could see that we had gap down this morning. We went straight right back up. We had a 67-point rally for the bulls off of these lows. But just let me make things very clear. This is what volatility is supposed to be like. You take out all of the bulls, you come in off of that bottom, and you run it up, and this was what was going to happen, and we knew that right from the start. Truly volatility, truly a trader's market and whatnot. However, like I said yesterday, that move was a head fake. We came in off of that low. We made the bottoms here where the original selling started. This is the upside volatility, a 67-point rally off of the bottom. Free 5-day trial, 702-665-0772. Not only that, this is what volatility is supposed to do. You can make a lot of money on the volatility when they gap down, and we called that part of it. And on an intraday level, you can buy off of these bottoms, and you can sell. Option market on the call side, put side, call side was super deflated. We were very short term on a 5-day oversold bounce. You could see that diagonal line. These are hourly candles, and they came right back in, and the short sellers that were in the S&P 500 had to buy to cover, and the S&P 500 futures markets were breaking out, and then the S&P 500 index went right along with it. Just be aware that this is a professional trader's market. We're market makers, and we couldn't have asked for more than to have this volatility, because you get the downside, you get the upside, you get the best of both worlds that have extreme movements. And it started, and so now we're going to see what the bull rally off the bottom is going to be like. And we'll know more about that later in the afternoon for what tomorrow will bring. However, remember, everything can't go down straight in a row forever. And there are market mechanics that happen with these moves that you need to be aware of. As we see it right now, here's where that initial high was. That trend line goes straight right up there, and it hits that resistance line up there. The low end of this bar goes straight right up there. It's a perfect trend line diagonally. And we got right in there. We come off to the bottom right here, connects here, comes right through here, comes right through there on that wick, and we hit it right there at 28.82, and this is what it looks like on a 60-minute view. Just remember, this market is going to continue to have a lot of volatility to the upside. And if you didn't get a chance to get out before all of this has happened, well, hopefully you'll take the time to really look at yourself, look at your account, look at who you are, what you are, and how you're dealing with the volatility. We're experts in volatility. We love it. And that's what makes us excited all the time, is when you get two sides of the market, really extreme selling. It was really extreme. And now that we've had that short-term extreme selling, we're going to look and see what the mathematics look like on the way up. Because you have to take the total reversal off of the top with the selling, and then you have to take the total reversal off of the bottom, then subtract it, and it's going to come up with the common denominator that will equal how strong or weak the rallies will be, and that when they do hit major resistance level, are they going to respond with another round of selling, where some of the bigger bulls that are caught in this market are going to say, well, gee, we're getting a rally up here and it's going. Now they have a chance to sell into it, and they will. Oh, yeah, they will. And, you know, that's the beautiful thing about volatility. That's a great thing about a market maker. We're market makers. This isn't day trading retail crap. But nonetheless, we do provide you everything in the live trading room with our option trading. Option on the call side of the market, call options paid. Boy, did they pay big. They were on sale for a trade. We had updated a couple of those earlier, the Google calls. We did the Amazon calls off of the bottom, and we did quite a few of them off of the bottom. I'll update some of them later. So, directional movement, what strength will continue. I can tell you right now up front, as we go up off of the low end of the rally, up, when we hit those resistance lines, there's going to be a brick wall there. So it was nice to see that on the opening bell this morning. They gapped everything down really big. Dow was down 600 points on the open. And S&P. It came right back down. It held that double bottom there, and we rallied up later in the day. We had a 4-hour rally that started right here at this support level. 1, 2, 3, 4. Went right up here and hit my trend line. To go all the way back over here, you could see that this is where the selling had went straight down like that. And we had a pop in the volatility, and then overnight things went real bad like we said it would, and then we went straight down. I will show the 4-hour chart again so that people can see that. Here's the 4-hour chart down here. I'm going to have to move that over for you, but there is a 4-hour chart, and that is the bottom, just to let you kind of see that view. And that was one big 4-hour candle. That's why I wanted to show the 4-hour candle versus the hourly one and whatnot. Once again, stay safe, be careful. Go ahead and join the live trading room.